Hi guys, it's Any, aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Today is Sunday, the 2nd of June 2019. I'm just going to go through a technical analysis breakdown of some UK and US stocks on my watch list. Let's get straight into it. You know what I'm going to ask you to do next. Hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. If you go in the comment section below and leave a comment on what stocks you want me to break down, I'll try and cover them in my next video. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check the description section below, there's a link to my mailing list. If you join my mailing list, you get priority access to my free training course that I'm creating for all my subscribers. You also get a free inbox every week, email straight into your inbox of all my latest videos. And you also get a spreadsheet that gives you a breakdown of the stocks that I'm in, that enter, my entries, my exits, my stop losses, and the reason behind my trades. Anyway, let's get back into the video. So I thought this would be good to start incorporating into just the beginning of most of my videos now, because I think it's really good to see a kind of like a heat map, if you will. Well, it's not really a heat map, but like a overarching map of the major indices and how they are performing over a long period of time, just that we can get a kind of wide lens view of how the market is behaving. As we all know, the market is down with stock side, so people are that's why bonds are up, I guess, because people are trying to move their retain the value of their investments by moving their money elsewhere. But yeah, so the Dow Jones, S&P 500, the Nasdaq, the Russell Group, over the last couple of months have been down. Over the last month, are down about 1%, thereabout each. So it's just, and the FTSE 100 and the DAX are down, even though they don't show the European ones on Finviz for some reason. And if you look down here, the one-day relative performance of some of these, are the performance of some of these. I don't even know why I'm looking at that. That's not important. Yeah, so I think it's just good just to look at, have an overarching view. As we all know, and I'm going to just keep reiterating this in all the videos, I've got a short bias right now. The reason I have a short bias is because the market is down. And when the market is down, how do you make money? Well, for me as a trader, I can short. If you go to a lot of these other investment channels, a lot of them are losing their heads right now, or the smart ones are keeping a cool temperament, but a lot of them are losing their heads because the value of their stocks have dropped significantly, and maybe all the gains that they've made for the last couple of years, maybe couple months, has significantly decreased. Obviously, this is a blip in the radar if they're looking to hold for decades, or if they're dividend investors, but you need to just have good temperament, because these things are going to happen. But lucky for me, because I'm a short-term trader, I can actually profit off the market falling. If anything, I can even be more profitable, because you know what they say, the stocks take the stairs up and then the escalator down. They go up slowly, but they come down really fast because people are panic selling, and so you can make a lot of money very quickly shorting. Anyway, enough of my rant. Let's get straight into the video. I've got 3 UK stocks, 2 US stocks that I'm covering today. First UK stock is, well, it's not a UK stock, but it's an indices. It's an indices, it's DAX. So last week I made a bit of money on the way down on DAX, and then I was in two minds whether to go long or short DAX when it was here, because I wasn't sure if it was going to find its way all the way up to the top, and I was kind of right. It went halfway, then it sold off, and it sold off quite a lot. It sold off and then it retraced. Now what I expect it to do is, actually, before I even look at that, let's look at the weekly chart. Let's look at the weekly chart. Straight away, you can see that it's been following this channel since about 2014. Up, down, up, down, up. So, but now it's kind of being tested at the 180-day simple moving average. I think it's just going to break through it, but we'll see. MACD, RSI, all telling me it's selling off, so it might start making its way back down. It may not make its way back down all the way to the support line, but it's selling off. So the weekly chart says sell. Daily chart, ignore my crazy lines. I've been following DAX for a long time, so I've got so many lines that might mean something at a later date, so that's why I keep them all there. On the daily chart, okay, so it's been selling off. 180-day simple moving average is flatlined. That's not really telling us much. MACD and RSI all pointing downwards. What this weekly chart tells me though is that it's sold off so much that it might be due a retracement. Yeah, it might be due a retracement. Look how far away the current price is from the 15-day exponential moving average, but you never know. That's just my speculation. On the 4-hour chart, now this is where it gets interesting. Let me get rid of this. On the 4-hour chart, yeah, this is where the interesting stuff happens. So it's sold off below the support line of the descending channel pattern, and then it's retraced back. Now let me go down to a lower time, actually 2-hour. Now that it's retraced back, I think it's in a position where it would probably want to sell off some more, because I'd say go down here, retrace back, and then sell off some more. Where I don't know is that where will it sell off to. So this is where I'd probably try and use some Fibonacci to try and help me out with my decision making. If you go from there to there, see, if I'd used Fibonacci here to here, it would have told me this was a selling point, this was a short point, because it went down to the 61% level. 61% level. So many lines on here. Sorry guys. It went down to the 61. From here to here, I did the Fibonacci retracement. It came back to the 61.8 level and it sold off again. So could it be that 1167 is the next level? Possibly, but I'm gonna delete that now. So this line is a line that I've had as a support line from a previous point. So let me find out where this line is significant, because I've had it here but I don't know what it means. Alright, so here we go. If you look at this point here, I'm all over the place guys, but I hope you can see what I'm doing. If you look at this point here, 11576, it was a previous resistance at December 2018. It could potentially be where it finds a new support at price now. So yeah, I'd say that would be the next level of support I can see it going to. But as it stands, yeah, for me, I think DAX is a short. I think it will carry on going down. I don't know whether it might need to retrace a little bit more, if it really could, but I don't know if this retracement was enough, or if it needs to go up a little bit more and then kiss the old descending channel pattern support line as a resistance before selling off some more. If it goes up, it'll be even better, because then I'll have a more favorable position to short. And if it shorts, I would short it down just to this line. But what I'll do is that I'll short it down to this line and then maybe take profit. If it retraces, I will enter again for another short and see if it breaks this line. But this is the line where I short to, and I'll see how I play it from there. I wouldn't want to presume that it's going to go lower than that. So, but as I said, the Fibonacci retracement that I placed here is telling me that it could go as far as 11304, but you don't want to assume. You want to let it play out. So this is a potential. What's it? Let me draw a block box here. This price level is a potential next level that can go to based on Fibonacci, but based on just previous support or resistances, this is the level that that I would probably take profit and then see if it breaks out of this. If it breaks out of it properly, then I'd probably short again down to this level. But yeah, that's how I'd play it so far. But yeah, it's a short from me from DAX, because based on every time scale, it looks like it's going down some more. Next one is Boohoo. This was one that was called out by one of the subscribers a while back, and it's finally broken out of the support line. I said that it was potentially a short, but I didn't want to short it until it broken this support line at 233, and that's exactly what it's done. So if you go to a weekly chart, the weekly chart, this line here at 250, it was treating 250 as like a resistance. It was resistance here, it was resistance here. So yeah, there's resistance there. The 180 simple move average is climbing up, and let me just look at MACD and RSI. Yeah, so MACD, RSI overbought, very overextended. Looks like it's pulling back and it's selling off. So yeah, it was a good position for a short there. On the 4-hour chart, it's yeah, it's once again good position for a short. It's broken out of the 180 days, the 15-day simple moving average, which is the purple line, broken out to the downside, retraced up, treated this line, this old resistance line as a support, old support line as a resistance, sorry, and as you can see here, it just kissed it here, and then now it looks like it's going to sell off some more. But yeah, MACD and RSI kind of selling off, kind of, and I don't want to go any lower than that. Yeah, so 180 days simple moving average on the 1 hour chart has climbed above price and looks like it's about to curve down. The only thing that I'm a little bit wary of is that on the weekly chart, the 188, well, it's quite flat. It's not really curving down, but I'd want it to start curving down a little bit. On the daily, yeah, so the daily is where you can see the best. So I drew a little grey support line here because I said that if you want to short it, it'd be good to short it to this grey support line. I'll change the colour so you can see it better. That was the initial position I was going to take on the short, but I think we missed a lot of this move, but it could potentially go down further. But you need to be wary that this support line, this line here at 218, has been a resistance twice before. So here and potentially here, we can kind of say that. So this could be potentially be treated as a support line, and it might retrace up. But so you need to watch out for this. But I'd see what it does when it hits this line first, whether it can breaks through it or it bounces off it, goes up, and then decides to climb. You'd want it to break through it emphatically, and then you could short it and see if it could short all the way down to the bottom. But yeah, that's it for Boohoo. And next one is NMC. This is one I covered a while back. Where is it? NMC. Let's put this alphabet order. There's shorts. That's what I'm all about. So NMC, as you can see here on the daily, 2984 was like a key support resistance line. It was a support here, resistance. It's a descending channel pattern. You know, I love trading those. 188 simple moving average is curving downwards, so telling me that price is selling off. Everything's telling me sell. And then if you go to the MACD and RSI, both selling off. It sold off quite a lot the last couple of days, so it might be due a retracement, but either way, I still am thinking in the long run it's going to keep selling off. Let's get to the 4 hour chart. So how would I play this? I would say maybe wait for a retracement, because you don't want to catch it here and then be in a kind of in negative position for a couple of days before it sells off. So maybe wait for it to climb a little bit and then short it, and then hopefully it will short down to the line. If we go to the weekly chart, this is a key point here. Do you know why? Because once it breaks the 180 days simple moving average, is now going to be above price, and that will really let us know that this stock is going to hit the ground. Well, not hit the ground, but carry on going down, because once the 180 day simple moving average on the weekly chart is above price and curving down, that means the stock has got a lot more to sell off. So that's just one to look at. I think it's going to be a great short. What I'll do, actually, let me check if Fibonacci. I love using Fibonacci, so let me see if that can give us a little bit more insight. I'm going to go from here to that here. It's not really telling me much. No, it's not really telling me much. Yeah, no, ignore that. Okay, so yeah, just short it, basically. That's what I'm saying in the grand scheme of things. Short it, that's what I mean. Next one is HBI. I'm sure you guys are sick to death of me talking about HBI, but still think it's a good stock, and I still think it's a short, so I'm going to keep talking about it. HBI, still a great stock to short. Once again, the only reason I'm not entering in this because I like quick movements. This may take a month to be realized, and I get itchy fingers. I wanna short something that can make me some money a little bit faster than that. If you go to the weekly, this is what I meant in my previous analysis when I say once price on the weekly goes above the once the 180-day simple moving average goes above price and starts curving down, that's when the big sell-off begins. Look at this. It was kind of selling off before, and the minute price went down, that's when it started really selling off. Like, that's why here I think it's going to make a big move to the downside. It's already made quite a big move already. It may kind of capitulate for a little bit, and then but I still think it's going to sell off way more. It's got way more to sell off. What I love about this one, the HBI, is that look at the MACD. Look how steep that gradient, that curve is. It shows you that it's going to sell off really hard. Look how steep it is. The level of steepness from the MACD and RSI tells me that it wants to go down fast, because if it's quite shallow, then it might be a slower move. But yeah, so that's really good to see. There's not much more I can say on this really. It's oversold. It looks like it's oversold on the daily chart, but so I don't know. That might mean something really. Either way, on the long term, I think it's still gonna sell off some more. Just have to, if you're gonna enter short in this position, you have to just be really patient, because as you can see here, from here to here is 4 months. Forget that. From here to here was a month. 300 pips for the month, which is pretty good, I guess. From here to here was 3 months. I've got time for that. And the last one is AMD. AMD. Look at it. Look at it. Okay. From the daily chart, this looks like nonsense. This looks like there's nothing to be traded. But if you zoom in a little bit, if you go to the 4-hour chart, there we go. What does this look like? It's an expanding wedge. Good one, guys. I know you said that at home. It's an expanding wedge. I made a video on it for my chart pattern series. I'll put the link in the top right hand corner. An expanding wedge. So before I get into that, if you look at the daily, you can't really see that properly, but the RSI MACD, it looks like it's curving downwards, so it looks like it's about to come down. It was in the positive territory, but it's curving down, so it looks like it's going to go back into negative. And weekly looks like it's going to go to negative as well, I think. Let's go to 2 hours. You have to be careful with this. This is why, because this one could be dangerous if you don't trade it right. What happens is that on the 4-hour chart, it's expanding wedge. So what some people might say straight away is, okay, it's gone up, it's gone down, it's gone up, it's gone down, it's gonna go down to this line, which I think it will. But be careful with expanding wedges, because as I've said in my expanding wedge video, when it comes down to the middle, a lot of time expansions will break out one way or the other. So it could break out, be bullish, or it could be bearish. If it's going to be bullish or bearish, once the wedge gets quite wide, it'll go to the middle and then it'll climb and break out. So it won't even go down to the bottom. So we might be shorting it at the worst position where it's going to climb up, or probably the best position. So you have to kind of let it go a bit past halfway to make sure that it's actually still selling off, because this could be where it's bottomed out and it'll climb up again. That's why when I'm looking at the 2-hour chart, got to be very careful, because look at the 180-day simple moving average is acting as a support here, but this could just be coincidental. You don't know. So I would want to see it sell off just a little bit more, so I know that it's not bottomed out here and it's going to climb, because there's a potential for that. It could have bottomed out here, climb, and then be breaking out to the upside, and then we pick the worst position to short. But if it's gone down a little bit more, then we can short it, and it's got a great potential, because that's like 200 pips, and you'd probably be only risking. You can short it and then maybe set the stop loss just above it, so you could be risking 100 pips to make 250 pips. So that's like 2.5. Yeah, 2.5 risk to reward ratio, which is pretty good. So yeah, so those are my stocks that I'm watching this week. It's Any, aka the Noctrader, signing out.